Here's a number that should scare you. 240. That's how many warranty callbacks the average 4-truck HVAC shop runs in a year. And every single one of them is quietly bleeding cash you never see on a P&L. Not from bad techs. Not from bad luck. From a cost most owners never actually calculate. A comeback looks free on paper. No invoice, no charge, just a truck going back out. Dispatch logs it as a warranty visit. Nothing shows up as a loss. But nothing about that visit is actually free. Somebody is paying for it. And that somebody is you. Your tech is on site for an hour, sometimes two. Fuel's burning. The truck's rolling. That's billable time, spent making $0. And there's a part in that pouch. O kompositor, o kointekte, o tsoil. It's coming out of your margin, not the customer's wallet. Add it up and a single comeback can run you $100, sometimes $200 in hard cost alone. But here's what most owners miss. It's not the labor and the part that hurts the most. It's the job you didn't take. Every comeback occupies a truck slot on your schedule for the day. A slot that could have gone to a new customer. A paying customer. A $300, $400, $500 ticket. That's the real comeback tax. And almost nobody is tracking it. Picture a Tuesday. Your best truck already ran 6 calls today. Call 7 is a warranty comeback from Monday's job. That's a slot a brand new customer wanted. They call your competitor instead. Nobody wants to look at their own comeback rate. It feels like admitting a mistake. But shops that measure it, fix it. Shops that don't keep bleeding quietly month after month. So let's put a real number on it. Industry benchmarks put comeback rates for HVAC service work somewhere between 5 and 10%. At the high end, that's 1 truck roll and 10 going out for 0 revenue. Let's do the real math, step by step. Say your average ticket runs $325. That's a fair number for residential service work. A comeback eats about an hour and a half of tech time, and maybe $40 in parts. Call the hard cost $150. That part alone stings. But that same truck slot, on that same day, could have booked a brand new paying call. So the true cost of 1 comeback isn't $150. It's the hard cost, plus the ticket you didn't get to write. Call it $475 all in. 1 visit. $475 gone. Now scale it up to a real shop. For trucks. 3,000 tickets a year. An 8% comeback rate, right in the middle of the industry range. That's 240 comebacks a year. Times $475 each. $114,000. Gone. On jobs you already did once. That number will never show up on your income statement as a single line. It hides inside labor costs that look normal. Inside a schedule that looks full. It shows up in your bank balance at the end of the year, when the math doesn't quite add up. $114,000 is enough to hire 2 more techs. Or buy a truck outright. Or fund a full year of marketing. Instead, it goes to warranty visits nobody ever looks at twice. And it compounds. A shop bleeding 6 figures a year in comebacks can't outprice, outmarket, or out-hire a shop that isn't. You cannot eliminate comebacks completely. Every shop has some. But you can starve that number down hard, with 3 fixes. First, a 5-point sign-off, every job before the tech leaves the driveway. Pressure readings. Amp draw. Airflow. Refrigerant charge. Capacitor test. 5 checks. For extra minutes on site. That's the entire cost of catching the near miss before it becomes a return trip. Shops that make this checklist mandatory, not optional, see their comeback rate drop within a single quarter. Print it. Laminate it. Bolt it to the clipboard. Make it impossible to skip. Second, track comeback rate by technician, every single month, out loud. Not to punish anyone. To coach. When Tech A runs 11% and Tech B runs 3% on the same call types, that gap isn't bad luck. It's a training conversation waiting to happen. Put the number on a whiteboard where the whole team can see it. What gets measured gets fixed. Some shops tie a small bonus to a falling comeback rate. Suddenly everyone's checking their own work twice. Third, price the comeback into your book before it ever happens. Build a small warranty reserve, a couple percent, into every flat rate ticket you write. When the callback comes, and on some percentage of jobs it will, it's already funded. You're not eating a surprise loss. You price for the risk on day one, the same way any real business does. Most flat rate books already have a margin buffer built in somewhere. This just makes it visible and intentional instead of accidental. 240 comebacks a year isn't a tech problem. It's a systems problem. Fix the checklist. Fix the tracking. Fix the pricing. Do those 3 things and watch that leak close, month over month. Track it for 90 days. You'll know exactly how much revenue was quietly walking out your door. This is Margin and Wrench. New playbook every day. Hit subscribe.